Well, welcome everyone to this week's wrap of the Australian property market. What a week. We have seen some incredible things, events, cancellations today of the Australian Grand Prix in Melbourne, football in jeopardy around the world, major events, concerts cancelled. Watch this space. So, surprise, surprise, the big four banks are, for once, acting with a social conscience. They passed on the full RBA interest rate reduction. Now that's following the Reserve Bank's decision to drop the official cash rate by 25 basis points to 0.5%. Now, according to the Fin Review, each 5 basis points that the major banks don't pass on, well, it lifts its profits by around $10 million a year. Now, apparently, a bit of strong arm tactics. ScoMo, Scott Morrison, the Prime Minister, got on the front foot. He's been talking up the national interest, and Treasurer Josh Frydenberg, well, he's done the ring around. He's been on the phone to the big bank CEOs, reminding them that, we really are in insurmountable times, and we need you guys to do the right thing. Now, from a homeowner and investment property owner's perspective, well, they couldn't be happier with historically low interest rates. In fact, Rate City trackers showed that mortgage rates dropped as low as, ready for this one, 2.44% immediately after the RBA announcement. God, I remember the days at 18%. Rate City Research Director Sally Tyndall says Westpac and CBA, well, they've committed to a variable rate under 3%, while the ANZ dropped its rate for investors by 0.35%, more than it did for owner-occupiers at 0.25%. Now, in terms of fixed rates though, ING has rolled out a new 3-year fixed rate of 2.49%. It's a record low. And Bank Vic, well, they've offered owner-occupied principal and interest borrowers a 2 and 3 year fixed rate at 2.5%. Now, Ms. Tyndall says that with another likely rate cut to the official cash rate, we're probably going to see both fixed and variable rates fall even further. Now, the property market, well, it's continuing to see spirited bidding at auctions. We've still got strong clearance rates, and so far, buyers have generally been unconcerned about the impact on them with the coronavirus outbreak. CoreLogic's national auction commentator Kevin Brogan says the strong clearance rates are telling us that people are still actively participating in the market. Now to the numbers, the auction numbers. Of the 811 auctions in Sydney last week, 83% of those were sold under the hammer. Canberra had a very solid clearance rate, also at 83%, but only with 24 properties going to auction. Brisbane sold only 52% at auction, but another 1,005 properties were sold privately. Now, according to the CoreLogic RP Data Daily Home Value Index, well, that's a mouthful, in the past 3 months, house prices have risen in all 8 capital cities. Year on year, Sydney's the strongest performer. Market rose by 12%, followed closely by Melbourne at 11%. Canberra and Hobart both grew at 5%. Now, unit prices. I don't talk a lot about unit prices, but in Sydney, Melbourne, Adelaide, Hobart, Canberra, Perth and Brizzy, well, they are all trending upwards. We have got a noticeable uplift in most of the markets, including the regional unit markets as well. Now, compared to a year ago, Melbourne unit prices are 10.5% to the good. Sydney is up 7% and Hobart around 5%. Now, CoreLogic also found that Hobart, no surprise there, remains the tightest rental market. In fact, CoreLogic's head of research, Tim Lawless, says Hobart has the strongest capital city rental yields. People are retreating back to property amidst the stock market volatility. I mean, look at Wall Street yesterday. We saw 9.5% wiped off Wall Street. It's a total since the 19th of Feb of 27%. Australia, well, today, in the first 10 minutes of trade, we saw just under 7% drop in the market. And it reminds me of the days when I worked on the stock market, the Melbourne trading floor back in the 80s. I remember being there on the 20th of October, 87. Now, property-wise, Upper North Shore agent David Walker says whenever there is a stock market volatility or other things are going on in the economy, People, well, they run back to real estate because they know money tends to be safe in good blue chip real estate. And well, with low interest rates, people can see money is cheap and readily available. Oh, now, the impact of coronavirus on unit completions is being felt as well. In fact, we're told we could see delays by up to 6 months we've got issues of shipments of building materials being held back due to the corona outbreak. In fact, Brian Seidler, Executive Director of the Master Builders Association for New South Wales, has said some members are already advising clients about possible delays, and he reckons that the biggest issue is going to be windows. I didn't realise this myself, but all glass and windows come from China, and 90% of ceramic tiles are also made in China. That's my wrap for this week. Stay well, look after your mums and dads, be smart out there, and have yourselves a wonderful weekend. This is Phil Robertson from Philip Robertson Property saying bye for now.